Assalamu alaikum everyone, welcome back to another video. I hope you're having a wonderful day. I'm really excited about today's video. The reason is because when I started this whole portfolio thing or whole YouTube thing was to kind of share my journey. And that's what I've been doing for the last, I think it's been 3 years, I think 3 years. I think I started 2020, December of 2020. Since then, although I haven't posted much at the time, I think that's when the videos started. And since then, I've been actually sharing my portfolio. And as you can see, I think at the time when I've started this whole thing, I think I had about £20,000 or whatever it was. And now, as you can see, we're getting closer to £90,000. And I'm going to continue doing this, inshallah, in the long run. And as long as, of course, you guys appreciate what I'm doing and so on. And, of course, there's a value for everyone out there. I'm going to continue doing that, inshallah. So what I would like to do today is look back for the year. Okay, so since January of this year, I want to show you how the companies that I own have performed since the beginning of the year. I want to show you the plan for moving forward. So what I'm going to do with the companies, I'm going to show you in terms of growth expectations, and I'm going to also show you whether they are undervalued or overvalued at the moment, what I'm going to buy, what I'm going to sell. Because what I would like to do is around this time, and I did this time last year as well, is to look at the performance of the portfolio, the companies that I own, and reevaluate some of those things. And that's what I've done. And I'm going to share with you guys today what I'm going to do with some of the companies in this portfolio. So moving to 2024, inshallah, I might do some sort of rebalance and take out some companies that have not basically either performed well or I don't think are going to perform well into the future, inshallah. Again, I don't like selling stocks just for the sake of it. I don't like trading in and out of stocks unless there's a reason, okay? And have shared with you guys over the last few years. If you like this type of content, honestly, it will take so much time to put these things together. Now, this video, honestly, I was not planning. When I did it last year, my plan was just for myself. And because of the reactions that people have received, basically I've received from people, I decided to do it again. But normally this is the kind of thing I do for myself, just to kind of reevaluate my portfolio. So I want to share that with you guys, and it takes a lot of time and research to actually put these things together. And I will show you exactly how I do it as well. So if you appreciate this kind of content, you appreciate what I'm trying to do and the fact that it takes a lot of time to put these things together, just like the videos, okay? That's the simplest thing that you could do, and subscribe to the channel so you don't miss anything out. As well as that, if you're really genuinely feeling generous and you want to, of course, help the channel and get something out of it as well, okay, where you can join the Discord, where you can share, there's a lot of brothers in there that are actually sharing good practices every single day. You get the Sharia compliant investing ebook. You will see all my buys and sells, as well as the dividend trackers and so on. Okay, so that will help definitely the channel. So if you could do that, that would be absolutely amazing. Try it for 1 month, see if you like it, and if you like it, of course, hang around. If not, just move on, inshallah. So what I want to do is this today. Okay, I want to show you the companies that I own. I want to show you their current prices. I want to show you the 1 year total return, and I mean total return as a dividends, as well as, of course, the price appreciation. I want to show you the 5 years. So I want to show you where these companies have been for 1 year and the last 5 years, to give us a fair, basically to understand how the companies have performed over the last 5 years. I want to show you the fair value coming from Morningstar. I want to show you whether it's undervalued, overvalued, or fairly valued, and so on. I want to tell you whether I'm buying these companies more, I'm going to sell, trim, hold, and or so on. I want to show you the growth expectations for these companies for the next 5 years per annum, inshallah. And that comes from the Yahoo Finance, comes from different analysts that work for different companies and so on. And again, this also comes from Morningstar and simply Wall Street. So a lot of this information comes from analysts, and that is kind of, sometimes they can be biased. So you have to be careful with that sort of thing. Always have your margin of safety. Now, I'm going to show you per sector first. And then what I'm going to do is show you the year to date, how much I'm up or down, basically with that new money added. So if I have not added a penny to the portfolio, right, since January of this year, I want to show you where it will be, so percentage wise. And I want to show you how, basically with new money added, where it is right now and how much it's up, how much it's down, inshallah. So that's the plan. It might take a little quite long, but I'm going to show you exactly every single stock I own and go through every single one of these things. And the first sector we're looking at today is one of my favorite sectors, and this is technology. I've got 5 different companies here. So I'm going to quickly show you how I got the 1-year return, total return, and 5-year total return. So I don't know if you have access to Seeking Alpha, but I do. So I paid for subscription. As you can see here, that's the company. If I click charting, for example, you get this information. This shows you price return. I'm not interested in price return. I'm interested in total return, meaning price as well as dividends. Okay, so for the 1 year, Broadcom has returned 107. Okay, let's call it 100 and basically 8%. The S&P 500 have returned 21%, so it's beating the market massively. And this is one of the reasons I wish I bought more of this company when I first started. When I started buying it, I used to talk about it all the time. Subhanallah, I wish I knew, I used to talk about it. I used to talk about when it was $300, $400, less than $400. I used to say it was basically undervalued. And I'm hoping now going forward they will do a split for the brothers and sisters out there who can't just basically buy whole shares, because right now it's not tempting to buy this company. But I'll show you what I think about. Anyway, so as you can see, it's beating the market is 107. So that information, okay, that you see there, that 107, 108 comes from here. Okay. If I change this to 5 years, you will see this company total return is up 427. Let's call it 428. And the S&P 500 is about 85. Again, the S&P 500 is doing absolutely wonderful, but this company is beating it massively. Now, if you look at the 10 years, okay, it's up massive, 2,723. Now, does this mean it's going to continue doing this? Of course not. No one knows what's going to happen. But at least it gives us an idea of where the company has been. And of course, we can look into the future, look in the cash flows and so on, and then revenue predictions and so on. But yeah, so that's where this information is coming from. So every single thing you see here comes from that charting, including the UK stocks as well. So this company, as you can see right now, 428% for the 5 years. Fair value right now is $970 per share from Morningstar, and it's fairly valued at the moment. For me, it's a hold. The reason is because I'm up a lot, over £3,000. I think it was like 120 something % up so far. I'm gonna hold it. Initially, I thought about trimming it, take some profit off the table, but I think this is one of the companies that I genuinely believe it will continue growing their revenue. And the fact that they've got VMware including in their business, VMware has the software side of things. Software they planning to change that software to SaaS model, so software as a subscription model, which is something I really love, because that means, look at Adobe, since they changed it to software as a subscription model, they made more money, because people can just go to their website, download the software, hold it, and then each year they just renew it without even thinking about it. So once you're in that environment, it's very easy to kind of continue holding on to that same software and so on. So that's one of the reasons I want to hold it. They're expecting the earnings to grow about 14% in the next 5 years. So why am I going anywhere else? The next one is Intuit. So I'll be faster now. Okay, so you can pause the video and watch it. So Intuit, as you can see, 55% up since the beginning of the year. It's a new addition to the portfolio. I'm up a little bit, but I'm going to hold on to this company for a long time. And the 5 year basically right now is 219% up for the last 5 years, so which is absolutely huge if you think about it. Fairly valued right now. Fair price is basically 500. Right now is, as you can see, 600, and then if it comes back to 500, I will be buying more of this company. 15% premium right now. I'm gonna hold it. 15% expected to grow in the next 5 years. Next one is ASML. I've had this company in my portfolio for a long time. It's only about 30% up this year, and I say only 30% up because we've just seen the S&P 500 up 21%. So if you had this company in the last 5 years, you would be up right now 944. This is the kind of thing that encourages me to hold on to these companies for the long run, because if I can hold on to it, right now Broadcom I'm up 100 something %, but if I hold it for 5 years, I could be up 400, 500, and you can trim it here and there, of course, take some money. There's no harm in basically trimming these companies if that's what you want to do. Anyway, the fair value is 240. to 750 fair valued according, and it's a buy right now for me. So I'm gonna nibble, just add a little bit here and there in the next few months. Okay, I'm hoping that we will see a pullback maybe into the 700s, 700, 650s or 600, whatever. Then hopefully I can start adding, but it still for me is a buy. 23% upside from now on. Same goes for Visa, 25%, 103% up, 248. It's a hold for me right now. I think I own about 20 shares, so I'm gonna hold on to that for now. 14% upside from now on here. Same goes for Qualcomm. Qualcomm is a hold for me. As you can see, it's fairly valued at the moment, 140, 143. So there's not much of a difference. 6% growth expected for the next 5 years. Right, the next sector we're looking at is healthcare. So healthcare, as you can see, I own 4 different companies. First one is Merck. Merck has not done absolutely anything this year. 2022, 2021, this company did well. 2020 was an absolutely horrible year. That's the year that I was buying. I'm up quite a bit, I think. So yeah, 71% for the last 5 years, which is decent for this company. Fair value right now, price wise, is basically $103 per share. Is 105, so that's why it seems a buy, or basically right now a hold according to Morningstar, and it's about 10% upside from where it is right now. J&J, another one, minus 10% this year, so I've done absolutely nothing other than going backwards. 38% in the last 5 years, and fair value right now is 164, discounted about 6%. It's a buy for me, so I'm going to continue adding this. I'll tell you more about all of these companies in a second. And then AstraZeneca, okay, 5% down. By the way, this doesn't mean the stock cost is 10,000, right? So that is basically 100 and whatever pounds. So I couldn't be bothered to change it from whatever it is to pennies or whatever, so I can't do the formula right now, so I just left it as it was. So I think it's trading about, I think it's about 100 and yeah, so 101 pounds basically, whatever it is right now. So that's why I didn't bother. 93 in the last 5 years, and I'm hoping that this 13% will come true. So for that reason, I'm basically buying this one. Medtronic, exactly the same, done nothing in the last 5 years. I believe the company 3% right now. It's basically absolutely nothing, but I think in the next few years I'm betting on this. I'm not a better, but I like the company. So let me tell you this before you start killing me, okay? Sometimes you have companies that are doing this sort of a thing, and growth wise absolutely amazing, and sometimes you get companies that are not doing really well, but you know that's the case, and you know that's the reason why they're in the portfolio. These companies are in my portfolio to kind of stabilize. Of course, AstraZeneca is slightly different right now. They're growing really fast, okay? But and Merck as well, because Keytruda is one of their drugs and it's actually selling really well. I think it basically sells billions of dollars every single year. But companies like Medtronic and J&J is there for in the portfolio to kind of stabilize, to bring down the beta, because these companies are high flyers and one of companies that are basically foundational stocks. And by the way, I'm doing a video, InshaAllah, I think tomorrow, basically about how to start a new portfolio and all of that stuff. So InshaAllah, everyone will benefit from that. But foundational stocks are companies that are very stable, predictable business, been around for a long time, and I can sleep well at night without having to worry about. And this is the reasons why these companies are in. You will see a few more of these companies when we get to these consumer staples as well. Right, next sector we're looking at is industrials. This is one of the sectors that I actually really like. I used to buy them a lot, and I think right now they are my top in terms of sectors. Okay, I've got 5 companies in here that I've been buying for quite some time. I've never sold a share of these companies. The only one that I have problems with right now is 3M. Okay, and as you can see here, Cummins is actually doing absolutely amazing. 5% up this year, 111% up in the last 5 years. It's discounted right now, so I will be buying more of this company. They're expecting about earnings to grow about 11%. 3M is a definitely sell for me, so it's a strong sell for me. As soon as I can break even, I might even take some losses, because right now opportunity cost is a lot. So I might just sell this company and buy another company that I know will give me that return, inshallah, in the long run. So I don't know, we'll see. I think I'm down about 1,000%. I'll show you the entire portfolio in a second. But yeah, right now it's definitely a sell for me. UPS is another company, has not done well this year. They expecting the earnings to decline, that kind of thing. So for that reason, it's down quite a bit. So right now, if you look at the last 5 years, you would be right now closer to 100% up right now. Okay, so why would you be worried about what might happen just 1 year? They're expecting the earnings to decline about 5%. I'm going to use this as an opportunity because the company is great. The cash flow is actually good. So I'm going to continue, inshallah, buying it maybe in the next few months. But right now it's a hold for me because right now it's 160. The basically fair value is 164. If it comes down to lower 50s, then I might start buying again. The another one I really like is Union Pacific. This company is absolutely great, up 18% this year. I wish I bought more. 93. Actually, I bought quite a bit of this company while it was undervalued. 93% up for the last 5 years. 204 is where the price should be. Right now, it's this thing basically 244. 13% premium, 6% growth expected in the next 5 years. And then ADP. ADP is one of the companies that I added in 2023, I think. So it hasn't done much, but 96% up in the last 5 years. I'm buying more. I'm going to continue buying. So out of the industrials, Cummins and ADP is the ones that I feel like I'm buying more of now. And then UPS and Union Pacific, I've got plans for them moving forward, inshallah. Right, next I'm going to do 3 sectors together. So the first one is materials. That's the air products and chemicals, one of my favorite companies out there. I feel like it's strong buy for me now. It has come down to the price that I'm looking for. 200 right now is about $270 per share. 314, that's what they're expecting their price to be. 16% discounted right now, is 10% expected to grow next year. So I'm buying more of this company. So 2024, you'll see me basically loading up on this basic company, inshallah. Next one is basically Rio Tinto. Rio Tinto, as you can see, it's actually up 9% this year, and for the last 5 years, 146% up. That is basically absolutely huge. Remember, this is total return, so the dividend, high yield dividend, actually does help with this company. $122 pounds, by the way. This comes from Simply Wall Street. So they think the price of this company should be $222 pounds, okay, which means it's 54% undervalued at the moment. For me, it's the buy. I like to buy them here and there wherever I can. They're expecting the earning to decline about 3%. I think this is Seeking Alpha. Okay, let me check. Not Seeking Alpha, Yahoo Finance. But if you look at Simply Wall Street, they're actually expecting about the earnings to grow by basically 6%, but that comes from Yahoo Finance. So again, this information comes from Simply Wall Street, and that comes from, of course, Yahoo Finance. So again, it might be growing, might be. Again, if this China basically situation gets better as we go along, they do have demand for iron ore and all the basically materials this company has, then of course this company will do absolutely amazing. I love the dividends. I like the company. I like the fact that the shares are still cheap. So I'm going to start buying more and continue buying more, because I have been buying here and there wherever I get a chance. This company, I wish I bought more. Guys, to 430 right now, 385 is where they think it's fairly valued at the moment. It's going to that higher tourism, probably right now overvalued. So at the time of recording, basically this is actually gone up, I think. So I'm sure this will become now overvalued. It's a hold for me regardless. It's 13% expected to grow. This is a wonderful business. I really like this business. I think at one point it became the highest with my biggest holdings in terms of my portfolio. But yeah, this is another great company. I'm gonna hold on to it now until it comes back, maybe in lower 350ish, 360s. Then I can start looking at it again. Home Depot, I love this company. I wish I bought more in 2020 when I started buying this company. 354 right now, 260, 24% premium. It's the hold for me. 2% growth in the next few years. Again, another consumer staples kind of company. Is a discretionary, I understand, okay, but for me is one of those companies where, you know, it's in the portfolio to kind of to stabilize things. I'm getting good dividends. Okay, in total return, 11% this year, decent, right? It's not, the earnings are not declining, things are okay, 2%. It's not going to grow massively. They might open a couple of more shops around the United States, but they're not going to grow fast. They're not going to have basically this type of basically growth in the next few years. So I don't expect that from it anyway. So it's there to stabilize things, inshallah. And finally, the one sector where I actually used to love so much, but lately it's been not great in terms of performance wise. Again, every single one of these companies is in the portfolio because I understand their products. I buy their products all the time. It's easy for me to get my head around what their type of business they are and so on. And as well as that, the growth is not there basically when it comes to these companies. You get your 2% to 10% in between. If you get 5%, 6%, it's absolutely wonderful. And some years you don't. And again, remember, some years you make some money, some years you don't. Right now, every single one of these companies is expected to grow 8%, 5%, 3%, and 8%. But this year, they've done absolutely nothing. For me, this is a good opportunity to start buying. Hence why I started buying Procter & Gamble again. Unilever is a hold for me now, although it's a bit undervalued at the moment. I want to grow my position in Procter & Gamble as well as these two as well. This one I want to get to, reckoning bank is I want to get to at least 100 shares. It hasn't done anything for the last basically 1 year and 10 years. 5 years, sorry. So what I would like to do is just leave it alone. Okay, in fact, I want to check 10 years. Let me see the 10 years. Wow, in the last 10 years, it's just done about 16% when the market has done 150 something percent. So yeah, I want to see what happens. I want to see if this, continues to grow. Hopefully this 3% will become more than 3% the next few years. In fact, let me just see what Simply Wall Street is saying. Right, so let's go to valuations and see. So 44%, 90 something. What am I saying here? Okay, so it's been updated since. It's gone down maybe. Okay, so 44% up from. Okay, and I want to see one more thing, which is the future growth. Okay, 7%. Okay. Earnings growth rate of 6.77%. Well, that's not bad at all. So 3% to 6%. That's what I expect anyway from this company. And Hershey's is actually another company that I started buying more of. I'm buying strongly right now. I want to build a good foundation of basically this company, and as well as that, I'm going to continue buying Procter & Gamble as well as Rocket Bank. Now, all of these companies are there for a reason. Okay, one I'm thinking of now, out of all of these ones, if I had to sell one, will probably be Unilever. I'm not really I like the business, everything else is going well, but this growth, okay, I don't want to own too many companies that have a lower growth. So I don't mind having Hershey because it's doing really well, and I think it will bounce back. I don't mind Procter & Gamble because I know in the next 5 years will probably do well and so on. But I don't want to have too many companies, especially these two are very, very similar. So, and I really prefer this one. I don't know why. Don't ask me why. But so if I had to take one out, probably take out Unilever and then add that money into one of the other companies just to kind of balance it, and hopefully at least have just one that is not basically giving me a flat returns on whatever the next 5 years or so. So yeah, anyway, there you have it. That's the entire portfolio. I know this is a long video, but I really want to share with you guys because this is what I like to do for myself. But I thought, you know what, it'd be a great idea to share it with you guys, because when we did last year, you guys have basically said it was really good. So there you have it. That's basically it. For me, it's important to know where the companies have been. It's important to know where they're heading. Okay, and it's important to have an idea of what I'm doing. So now all I need to do is every time the stock basically, I've got a bit of money added into the portfolio. I'm looking at the companies that are in the buys, strong buys, and then buy those. And then once we get to InshaAllah, basically break even with 3M, I'll sell this out. And then of course I will be adding a couple of more new companies. I'm looking at the oil sector right now. There's another, I'm looking at oil sector, but I think I'm going to play it differently, so I'll let you know basically what that means. Now finally, a couple of basically things I want to share with you guys, and that is the returns. So a year to date with new money added, I'm up 9%, 9.31%, which is really good. Every year if I can get that on my money, that's absolutely perfect. Okay, that's with new money added. With that new without new money, sorry. With new money, okay, I've added, by the way, let me just tell you exactly, I've written it down somewhere here, £19,657, closer to £20,000 since the beginning of the year. Alhamdulillah, a lot of that was because I was leading up to from January until April, sorry. I'd like, of course, because we're heading towards the maximizing my ISA account, so I add a lot of money around that time. Now if I show you the portfolio, that's probably what's going to happen this year as well, because I still have, if I can show you, if this works, there we go, I still have to add about £7,500 between now and April. So by the time we get to February, March, and I'm like, okay, now I need to add more. So probably the same thing will happen. But like I said, I've added closer to £20,000. So with that money, with the price appreciation, all of that basically gives me about 44% up year to date. But this is the organic, this is the basically, if I had not done anything to it, okay, just the mainly dividends and whatever else that came into the portfolio, that's basically what I would be doing, and that's really good. And these companies are not the Teslas, they're not the high flyers. I don't have that many high flyers. I only had Microsoft, which is gone up quite a lot. I took about £2,000 off the table by selling that company. Okay, I have Broadcom that's killing the market right now and so on. But again, I also have companies that have done absolutely nothing for this year. So I'm down 7% with certain companies, okay, or more, and I'm up over 100% with certain companies. And that's the reason why I love basically picking stocks, because it kind of balances things out. And in the long run, if you're making this sort of a money, okay, I'm not beating the market, okay, but at least I'm getting decent money for my money, and that's the most important thing. And it's actually, I'm learning a lot. That's again another important thing. Anyway, if you have not joined us on the Patreon, please do. Everything I've said here is just for entertainment. Again, don't go away and buy these companies, because the past does not tell us what might happen in the future. But at least I'm betting on the InshaAllah things will continue the way they were in the last 3 years. Since I started in the last 4 something years, I've actually been consistent. First year I've learned a lot. After that I've been consistent, and I'm going to continue doing this, inshallah, sharing with you guys every single week. And if you appreciate that consistency, if you appreciate the transparency, please like the videos. Have a wonderful weekend, inshallah. Assalamu alaikum.